Thank you very much, Precious. The Central Bank of Nigeria, CBN, has renewed its sensitization and proper handling of the Naira through the flag-off of a roadshow in Abuja. Officials of the Apex Bank at the flag-off urged Nigerians to keep banknotes clean, avoid folding, and use proper storage. CBN's Deputy Governor Operations Department, Dr. Bala Bello, stressed that the Naira is more than just a medium of exchange. It represents our national pride and sovereignty and shared destiny as a people. The Deputy Governor, represented by the Director, Currency Operations and Branch Management Department, Dr. Adedeji Adetona, said the campaign is to respect Nigeria's national symbol. The Director said the flag-off is the beginning of an important journey to strengthen the currency and sustain the financial ecosystem. Acting Director, Corporate Communications Department of the CBN, Mrs. Hakama Sidi Ali, said one of the objectives of the Apex Bank is to ensure the availability of clean notes. The Independent Media and Policy Initiative, IMPI, has welcomed the decision of the Central Bank of Nigeria to reduce the monetary policy rate to 27%. IMPI Chairman Dr. Amoni Akinsiju, in a statement in Abuja, said the decision aligned with the position of IMPI's analysts had taken in its recent policy statement. He said the reduction, which is the first in 5 years, signaled the beginning of a monetary easing cycle expected to continue in the next 3 quarters. According to him, the decision is well guided by data on inflation and exchange rate movements, reflecting the Apex Bank correctly interpreted the economic barometer before easing its hold on rates. The IMPI boss said the decision would lower borrowing costs for businesses, improve the operating environment, and eventually impact on prices of goods and services. And now, following the Central Bank of Nigeria's decision to lower the monetary policy rate by 50 basis points to 27%, reactions have trailed the move among financial experts. On Business Nigeria, the CEO of Finance with Mukhtar, Mr. Mukhtar Mohammed, commended the Apex Bank's bold step, noting that its positive impact on the financial markets.
I think it came as a surprise that they did it earlier. I expected it, but maybe I was expecting it their next monetary policy meeting. Maybe they may have to look at inflation. But again, to the week coming to this MPC meeting, you saw how the Naira was winning over the dollar for a very long time. And I keep saying, and I'll say it, I mean, the key driver of inflation in Nigeria is not just extraction of liquidity in the system. It's also high exchange rate. So when you see those exchange rates start coming down, definitely, I think they are very confident we got to as low as 1,497 Naira for the exchange rate in the official market, which has become one of the most transparent market that we've seen. We must give it to the CBN. I mean, when they came in, it was more or less we saw the exchange rate move to almost 2,000. People were projecting that it would be 2,500. But today we are sitting comfortably at 1,500 or 1,550. And a lot of people still see a lot of potential for the Naira to gain over the dollar in the long term, especially when you look at our robust reserve that we're having. You look at our oil output, you look at the microeconomy in the non-oil sector. When you put all this together, you are excited with the years ahead, what will definitely happen to the Nigerian economy.
Concerning the Center for the Promotion of Private Enterprise, CPPE, has called for urgent policy reforms and digital transformation as key strategies to unlock potential of Nigeria's oil and gas sector. Chief Executive Officer of the Center, Dr. Muda Yusuf, made the call while delivering a paper at the 2025 Annual Public Lecture of the Nigerian Union of Journalists in Lagos with the theme, Transforming Energy, the Digital Evolution of Oil and Gas. CPPE boss, speaking on the topic unlocking the potential of Nigeria's oil and gas sector and promoting digital transformation, stressed that Nigeria must prioritize reforms and digitalization to build a globally competitive, resilient, and sustainable oil and gas industry. He said such steps were vital to secure a prosperous energy future for the nation. CPPE chief called for a full implementation of the Petroleum Industry Act, PIA, to restore confidence in the industry. Asian shares have taken a breather from recent rally as investors searched for fresh catalysts, while the yen came under heavy selling pressure against the euro and the Swiss franc. European stocks are set for a subdued open, with Euro Stock 50 futures off 0.1%. S&P 500 futures and Nasdaq futures were flat, ahead of a lineup of Federal Reserve officials whose remarks will be closely watched by their views on interest rates. MSCI's broadest index of Asia-Pacific shares outside Japan slipped 0.1%, having rallied over 5% for the month and 9% for the quarter. Japan's Nikkei rose 0.2% after jumping 7% for the month and 13% for the quarter. Chinese shares outperformed, with blue chips 0.7% higher, and Hong Kong's Hang Seng advanced 0.2%. Chinese tech shares are up for the 8th straight week, the longest winning streak on record on AI optimism. And the world's second and third largest economies are signaling a melt in their trade relations. China's Premier Li Qiang and European Commission President Ursula von der Leyen met in New York on the sidelines of the United Nations General Assembly, stressing cooperation at a time of mounting global economic and political challenges. For nearly 2 years, China and the European Union have been on the brink of a trade war. The standoff began after Brussels launched anti-subsidy probe into Chinese-made electric vehicles, sparking retaliatory investigations into European brandy, dairy, pork, and other exports. But with Donald Trump's protectionist trade policy squeezing both Chinese and European exports, Beijing and Brussels now appear keen to ease tensions. Premier Li expressed hope that the EU would keep its markets open for trade and investment, while calling on both sides to maintain strategic independence as two global powers. Singapore government have given Meta platforms until the end of this month to introduce measures including facial recognitions to curb impersonation scams on Facebook. Minister of Home Affairs says Meta will face a fine up to $1 million if it fails to comply without reasonable excuse, and $100,000 for each day after the deadline. Earlier this month, Singapore's police ordered Meta to implement anti-scam measures against advertisement accounts, profiles, and business pages impersonating key government office holders on its Facebook platform. The ministry said it saw an increase of scammers exploiting Facebook for impersonation between June 2024 and June this year, using videos or images of government officials in fake accounts.